Senate receives 2022 to 2024 medium-term expenditure framework. Google report shows Nigeria leads mobile app market growth in Africa as Vice President Yemi Osinbajo pledges government commitment to the nation's economic recovery and growth plan. And markets across the globe bleed on U.S. inflation figures. These and more coming your way on Business Express on the network service of the NTA. And we are reaching you from Abuja, the nation's capital. I'm Liakatun Babatunde. Good afternoon. Now we begin the business of the day by informing you that President Muhammadu Buhari has transmitted the 2022 to 2024 medium-term expenditure framework and fiscal strategy paper to the Senate for consideration.
The committee has to work between today and tomorrow so that we're able to consider it on Thursday before we close for our annual recess.
And of course, that was yesterday. Moving on, Nigeria is engaging local and international investors to showcase investment opportunities aimed at deepening economic reforms and encouraging inclusive growth. Vice President Yemi Osinbajo at a one-day webinar organized by the Bureau of Public Enterprises along with the Nigerian Exchange Group and the Nigerian Investment Promotion Commission (NIPC) says government is committed to the success of the nation's economic recovery and growth plan. Buster Eva reports.
The pathway to recovery requires effective and deliberate strategies to succeed. This session is a demonstration of collective effort to showcase investment opportunities available in Nigeria, particularly in the wake of the COVID-19 pandemic and its consequences on the economy. A critical component of the government's income plans this year is privatization, and Vice President Yemi Osinbajo says government is working with key stakeholders to identify investment impediments and level them in line with the ease of doing business.
That is the BPE, on behalf of the federal government, as the counterparty on all infrastructure projects being developed on a PPP basis, whilst the ICRC will be the regulatory agency for PPP transactions, with powers to inspect, to supervise, and monitor the projects and processes in order to ensure compliance with relevant laws, policies, and regulations.
It was an opportunity to fuse ideas that would enhance quality and service delivery long after privatization of government-owned enterprises, in line with international best practices.
From our own, schedule for the current fiscal year, the total number of projects that we are putting into the investment space should be able to generate a proceeds in the region of about 500 billion naira.
The investment webinar availed policymakers the opportunity to present the low-hanging fruits for private sector investors to leverage as drivers of economic development.
The African Development Bank, AFDB, has unveiled a design to swell investments in the Nigerian economy. The AFDB, in a statement, said it would partner with like-minded development partners and financial institutions in the organized private sector to inject a cocktail of instruments, including direct lending, equity participation, de-risking facilities, and the platform of the African Investment Forum to support the government. This initiative is also to help other key stakeholders in implementing bold and innovative approaches to drive private sector participation and investments in the economy. Already, the bank has loaned out $256 million and $200 million for the Nigeria Transmission Expansion Project, NTEP-1, and the Nigerian Electrification Project, NEP, which will contribute to strengthening the transmission network and promote off-grid solutions. In the transport sector, the bank's $430 million support for the Enugu-Bamenda road linking Nigeria and Cameroon is expected to be completed this year. This will provide a gateway for enhanced trade between West Africa and Central Africa. The two projects have attracted an AFDB financing of $886 million. Now, in the first quarter and first half of this year, consumer spending on mobile apps in Africa hit new records at $32 billion and $64.9 billion. A report by Apps Flyer in collaboration with Google gave insights into how the African app market has fared since the pandemic broke out last year. The report tracked mobile app activities across three of Africa's largest app markets, Kenya, Nigeria, and South Africa, between the first quarter of 2020 and first quarter of 2021. From the first half of 2020 to the first half of 2021, the African mobile app industry, which is predominantly Android, increased by 41% in overall installs. This was analyzed from 6,000 apps and 2 billion installs in the three markets. Nigeria registered the highest growth with a 43% rise. South Africa's market increased by 37% and Kenya increased 29%. On the currency market, the US dollar held near a 3-month high against its rival on Wednesday. Let's see the exchange rate. The adoption of mobile channels as a means of driving financial inclusion of the unbanked has come to stay in Nigeria. This may have necessitated the Central Bank of Nigeria to issue a regulatory framework to create an enabling environment for the orderly introduction and management of mobile money services in Nigeria. The framework defines the regulatory environment as a policy path towards achieving availability, acceptance, and usage of mobile payment services. Mobile money services in Nigeria, its rapid growth as a practical strategy for financial inclusion, especially in the informal sector, is the focus of our discussion today on the program. And our guest is an economic expert, Dr. Chijioke Ikechukwu. It is a pleasure having you once more on the program.
Thank you very much. It's my pleasure too.
Great. And so, of course, mobile money has really evolved. Can you talk us through the purpose of mobile money?
Even before the advent of COVID-19, Nigeria had actually done so well in mobile money, having to have Nigerians have access to financial services wherever they were. And that service became very prominent during the COVID and, of course, after. The basis for it is the fact that financial inclusion is what the federal government is talking about all the time through CBN, and the fact that everybody, especially if you have an Android phone, you actually have access to financial service. It is a necessary tool to have because there are people, especially in the rural areas, and these are the people the mobile money services are targeted at. There are people in the rural areas who do not have a single bank very near to them, or the banks that were near to them have been shut down for one reason or the other. And so for such people, once there is a service of any of the networks of telecoms companies, they'll still be able to have access to their financial services with banks. So that is actually the essence of having to have mobile money service reaching out to everybody. Recall that in certain villages or rural areas, either because of the terrain or because of lack of real roads to certain places, or probably lack of population of such people, there may not be banks, or banks will not consider it viable to establish their branches in those areas. That is where mobile money becomes very necessary and very helpful to, yes.
Okay, but how is this helping to facilitate improvement in commercial activities?
A lot of it is happening. You understand that a lot of people don't even go to the banks now. I can't remember when I entered my bank, and I do all my transactions from my phone and from my laptop, and that is happening to a lot of people. And you see that so many of such payments are online today and real time. A lot of people we didn't think were lettered enough are still having access to their phones and using them to do financial services. And I can tell you, Nigeria has actually done so well in mobile money services, because I can tell, I have experienced some other countries where the kind of alerts we receive, the kind of payments we make from one account to another, and we receive alerts of payments made, and when we make payments, we receive receipts. Many developed countries still do not have such services. Yes, with internet service, they do have those, but with what we do with our mobile phones, many developed countries are not having such facilities. So I think we have done well in that area, and of course, the purpose of having to reach out to the unbanked, we still have a lot of their population as high as up to 40% unbanked Nigerians. So this is just what the mobile money is targeted at.
Okay, now I would like to ask you a double-sided question. Reaching the unbanked, is this an issue of trust or lack of knowledge? That's on one hand. On the second hand, one would also be tempted to ask, are banking jobs at risk?
No, banking jobs are not at risk, because you cannot do mobile money again without having to link up with a bank. Either the mobile money service provider or the customer proper must have something to do with the bank. And of course, InterSwitch will just have to switch them on. So you cannot give what you don't have. You must have something somewhere for you to actually send to somebody else. So banks are not at any way in any risk, because there are many services the mobile money services cannot render. Services like foreign exchange transactions, for services like lending and borrowing, and so those services they cannot render. And because of that, there is no competition at all. All that the mobile money services will do is just to enhance the services of the banks on their own.
Okay. So, of course, the CBN has brought up a regulatory framework, but then before we go to the framework, I would still need you to speak about the issue of trust, or is it lack of knowledge?
It is the fact that it has nothing to do with lack of trust. Neither does it have to do with lack of knowledge. The essence of mobile money is the fact that it's just like, if you cannot get this, you can have access to this. If you cannot have access to this, you can have access to that. Now, if you say these people cannot lend, cannot borrow, cannot do certain transactions, it also has to do with limited capacity that they have. So because CBN wants to have enough of its regulatory services reaching out to every financial service rendered in the country, they want to make it available to everybody. And if it's available to everybody, you see that business transactions are going to increase. And if that is so, poverty obviously gradually will just be eliminated if people can do financial service. So it is neither lack of knowledge or the fact that there is no trust.
Okay, so with 65%, that's the size of our informal sector. Should that worry us as a country, as an economy?
Yes, it should worry us Of course, the fact that we have 65% as informal sector does not mean that they don't have life. There's also economic activities going on at that level, at their own level. That is why we have the MSMEs sector coming around that space. You know, so economic activities are also going at their own limited level, and so from level to level. So it shouldn't worry us. All we need to do is that since we have that population and that percentage, what we have to do is just to ensure that economic activities are revolving around those. Because if we have the GDP of the country being driven and grown through that percentage, that means we're also growing our overall aggregate GDP more than ever before.
Okay, so what exactly, how would you situate the relevance of regulating these mobile money services?
It is very important to regulate this service. If it's not regulated, you will see that there will be a lot of fraudulent activities in the first place. There will be a lot of abuses, and there will be a lot of losses incurred by either the service providers or the customers themselves. Regulating it also means that the central bank will have to have an account of how much is being transmitted through this means. If they don't regulate it, there's no way they'll have knowledge of how much money, because you know many times we talk about money in circulation, whether M1 or M2 as the case may be. If CBN does not have an idea of how much money that's been circulated using this particular medium, it is difficult for them to actually claim that M1 or M2 is as large as this. So regulating it actually will remove fraudulent activities. It will also remove misappropriation of funds, and it will protect both the customers and the service providers. So the benefits are so many.
Okay, so now we cannot also do away with the fact that there will be irregularities, for instance. So how do you think the authorities would better track these circumstances and, of course, to address them?
Okay, great. The essence of regulating them is the fact that at least once every year, CBN will send the inspectors to look at the books and look at the activities of these providers. And so once CBN establishes such examination framework, then it becomes difficult for such malpractices to happen. But whether they will happen, they will always happen. But it's just to the extent they will happen that they will be controlled by CBN. So being regulated and supervised by CBN means that at all times they are going to be looking at their books and looking at the activities to see where there are infringements and infractions in the activities of the mobile money services companies.
Okay, I must sincerely thank you, Dr. Ikechukwu,
Thank
for
you very much.
spending time with us on the program.
Always my pleasure.
Great. Now, the Africa Export-Import Bank, Afreximbank, and the African Capacity Building Foundation, ACBF, have signed an agreement to support capacity development initiatives over a period of 5 years, ending in 2025. The agreement, signed by Professor Benedict Orama, President of Afreximbank, and Professor Emmanuel Nadozie, Executive Secretary of ACBF, will see the two Pan-African institutions contribute to capacity development for the implementation of the Africa Continental Free Trade Agreement, AfCFTA, encompassing knowledge sharing, advocacy and promotion of trade and economic development in African Union member states. Professor Orama emphasized the need for African institutions to harness the power of collaboration to achieve maximum results in developing the African continent, particularly during and after the COVID era. Professor Nadozie acknowledged the timely support by Afreximbank, saying it would enable the foundation to continue its support to African countries faced with capacity challenges that have been exacerbated by the COVID-19 pandemic. And of course, moving on, oil prices remained well above $75 a barrel in early trade Wednesday, but declined mildly at midday after data showed a drop in China's half-year crude imports, while expectations for a further tightening of U.S. inventories offered support. Brent crude was down 0.5% at $76.11 a barrel, West Texas Intermediate was up by 0.6% at $74.79 a barrel. China's crude imports dropped by 3% from January to June compared with a year earlier, the first such contraction since 2013 as import quota shortages, refinery maintenance and rising global prices capped buying. Copper prices lost ground in low volumes on Wednesday. A look at prices of copper and other commodities is next. The Nigerian exchange market this Wednesday, the midweek trading session ended some few minutes ago, and it is just 24 hours after the market closed flat on Tuesday. The NGX all-share index advanced marginally by 0.04% at the end of today's session to close at 37,872.55 points. Market capitalization inched up to 19.7 trillion naira. Investors exchanged 197.2 million shares valued at 2.139 billion naira. Meanwhile, the global investors' mood dampened and sign of increasing inflationary pressure this Wednesday. And of course, Boss Abel has been looking at the stock market and happenings around the globe. Boss,
yeah, how are you?
Fine, thank you. So, how is the American market affecting the stock market? I think we're starting from Europe.
We are starting from Europe. We know after the release of US released their inflation figures, which was surprisingly very high on Tuesday, which was yesterday. It really dampened the markets as at today's trading. We can see the DAX dropped 0.19% to close 15,760.05. FTSE also dipped 0.59% at 7,082.28, and CAC 40 also depreciated at 0.33% at 6,537.04. Shares in Asia Pacific were also affected by the US inflation report. The Shanghai Composite dipped 1.07% to close 3,528.50. Nikkei depreciated 0.38% at 28,608.49, while the Hang Seng Index also dipped 0.63% at 27,787.46 as at its final hour of trading.
Meanwhile,
yes, all red, exactly. Then in U.S. stock index futures were little changed in early trade Wednesday as investors access a rush of second quarter earning results from big banks and other major companies. But as the trading progressed, slightly change were recorded. Before then, however, futures controls tied to the Dow Jones Industrial Average dipped 0.31%, S&P 500 0.35%, and Nasdaq Composite also fell 0.38%. It was a bit different for Africa markets. South Africa's JSE Africa Top 40, Nairobi's all-share, and Namibia's overall index posted gains. They were 1.34% for South Africa, 0.23% for Nairobi, and 0.05% for Namibia overall index, while Tunisia and Ghana were negative. That's the situation of the report.
Wow.
We hope investors will be optimistic as markets opens tomorrow.
Of course, Nigerian investors are beginning to pick up steam, but I think the American market is doing some sort of negative to all the markets, the major markets, but
exactly.
Africa is still just trading in the balance.
Mixed territory.
Oh, fantastic. Now that's so much we have for you on this edition of Business Express. Of course, we're returning tomorrow morning at 9:30 a.m. Remember to keep in touch with us. Send in your comments, observations, suggestions, and of course, your questions. The program is available on the YouTube channel of the NTA. Be safe out there.